our seminar this afternoon, which is all about how you can get the most out of your banks, which I think is hugely appropriate, not just for now, but sadly, probably for the next few months. And we are joined by an expert in how to get money out of your banks, or how to have a better relationship with your banks. And that is Steve Cockell from Obica Consulting. And just to give you a little bit of background about Steve, Steve set up Obica Consulting last year after a very successful career in corporate banking that expanded over 30 years. And he's worked with a number of the large organisations that you will have heard of. And he left that corporate world to support SMEs find the best funding package for their business. So any size from 250,000 to 25 million. Typically, most of his clients are in the range of 1 million to 10 million turnover. As he said, banks can be difficult, but the good news is that there are an increasing number and variety of lenders, many of which have been established over recent years. And I know I can speak personally from people that I know, and I know Bitter have also benefited from Steve's advice in helping a number of companies in a number of sectors get some of the various grants and loans that have been on offer since we went into COVID-19. And what Steve's doing now is he's moving on to, we've got through the first part of COVID, and what he's going to do this afternoon is really take us through how we're going to get through the next few months in terms of using our banks and working with our banks to help keep our businesses not just afloat, but thriving through what is going to potentially be a difficult few months. So at that point, I will hand you over to Steve, who is going to take you through a presentation. There will be the opportunity at the end to ask questions. Please do. This is your opportunity to ask anything you want. Steve is an expert and very happy to answer those. Sadly, we have a number of people who wanted to join this afternoon, but the timing didn't work for them. So they have sent through some questions as well, which I will ask on their behalf at the end. So now over to Steve.
That's great. Thank you very much, Bridie, and good afternoon, everybody. I'm just going to share the screen now. Okay. Can you all see that?
Yeah, you just might want to put it onto slideshow, Steve.
Oh yeah, here we go. Yeah, how about that? Is that good?
Yeah, perfect.
Well, fantastic. So I'm going to talk for 20 minutes or so about dealing with your bank during this recession. As Bridie has said, I help people grow their business by raising finance from the debt markets, and I've worked for over 30 years inside big high street banks. And in the last recession, 2008, 2009, after the global financial crash, I was the senior executive for Royal Bank of Scotland and NatWest in the West Midlands, East Midlands and East of England. So we had the largest market share across that whole region. And I saw at first hand how banks really switch into a different way of working, and how the frontline teams had to implement top-down directives, many of which were quite difficult. They're quite difficult on the clients, and they were quite difficult on the staff inside the bank. So I want to take you inside the banks, how they work, what their thinking and behaviour is, and then really look at how we can prepare for that new environment and what options are open to us. So, the recession, not technically here yet, but I think we all know it's virtually here. New figures out today for the UK, really confirming, I guess, what we felt. The FT is saying this could be the deepest downturn, and the UK could suffer more than any other developed economy. Well, we'll see how that pans out, but certainly the government have taken extraordinary steps to support business through the emergency funding schemes, the furlough arrangements, all the other measures that the Chancellor has taken. And what I want to concentrate on is really what is the banking impact. The banks have had their hands full for the last 3 or 4 months, sifting through all the applications they've received for emergency funding. And we're really at the tail end of that process now. And they will very soon start to turn their attention to managing the loan book they have as a whole. And when that loan book starts to underperform, then I think we're going to see a sea change in attitude. And when I say underperform, I mean that they are expecting their clients to deliver certain trading numbers, and those numbers may fall short. The test levels or covenant levels in loan agreements may start to be missed, or worst of all, there may be defaults on the loan book itself. And this is on a background, and many of you will know this, that banks have changed from the image that we probably have in our heads. The old friendly bank manager has long gone. And for a number of clients, if you're in the small business segment, banks have worked out they can't make enough money to provide dedicated relationship managers to small businesses. So I've been helping lots of businesses that are in that segment and are in a sort of a mass market type of offer, telephone banking, online banking of that sort. But equally, there are still relationship managers dedicated to serving a portfolio of clients if you're deemed to be of sufficient size or indeed income opportunity to the bank. And that's how the bank looks at these things. But those relationship managers are quite often inexperienced. They often change quite frequently. And over the last 10 years since the last recession, frontline staff have been given less and less authority. So they have to try and wrestle with the policy that's been set. They've got little room for personal judgment or interpretation. And it really creates an additional set of problems for clients dealing with banks. And I suppose the way I would sort of categorize this in terms of where we are now is that banks have traditionally had something of a herd instinct. When times are good, they're trying to push money out the door, lend more and more, lend larger amounts on cheaper terms and cheaper pricing. And then as soon as as I've categorized here, the pendulum swings back, they rush in the other direction, frankly. And what we have seen is a really far stricter set of criteria for clients wishing to borrow money in these times. I suppose I don't expect you to have any sympathy for banks, but it is true to say in the last 10 years they've had to commit a lot more capital to supporting their loan book, and they've been under increasing scrutiny by the regulator and a lot of stress testing on the book. And so they've partly of their own making and partly because of the way that they are being managed, they have created some credit policies by sector in particular, which mean that if a client fits within a certain set of criteria for a loan application, then it is something which has a good chance of success. But if you're outside of that envelope of criteria, then it's very difficult to get something approved, because there is literally no upside for a credit officer to step outside of policy. So if all the big banks, have sector policies, and if you're a construction client and you go to the bank, they will almost certainly say, we've got modest lending appetite for your sector because we've had issues over here with certain customers and we've taken some losses. and therefore, you have to sort of position that lending application in a way that fits within the criteria that has been laid down by the bank. So it is very frustrating. At the last recession, the bank that I was in, and all of the banks, did very similar things, created new committees, watch committees, capital commitment committees, additional credit committees, and a vast array of monitoring of their customers' performance. And I've seen all of that firsthand, but the banks really realign themselves to managing the book. That is undoubtedly what's going to happen this time. So getting through that background, which I do admit doesn't sound very positive, you need, as a client of a bank, to find a sponsor within the bank who is going to support your case and your business. Primarily, it tends to be your relationship manager, the person responsible for your account within the bank. You can't personally turn up to a credit committee and put your case. You have to put your case to somebody who's going to speak for you inside the bank. And therefore, it requires a lot of thought and more effort than in normal times to really ensure that your messaging and your information is in such a way that addresses the bank's requirements and the bank's questions. And often I find the more senior the contact you have within the bank, the easier it becomes. There are a number of cases in the last 3 months with the emergency loans where I've had to escalate the contact point within the bank to get a better hearing for the client and a better result at the end of the day, because more senior people have a greater degree of ability to sort of step outside of that risk envelope and take decisions and influence decisions. So it's very important, A, to build your relationship with your relationship manager, of course, but equally, there will be circumstances when you would want to find out about how the hierarchy works within the bank and who that person reports into, and whether you could have a meeting with the more senior person at some point because you really want to get closer to the bank and form a closer relationship. Because when times are tough and there's a bump in the road, you want to be able to call on people who know the business, who know you, and who can speak for you inside the bank. So my recommendation is this is a moment for you to really examine the arrangements, the borrowing arrangements and the facilities that you have from the bank, because you need sufficient headroom and sufficient flexibility to get you through what is going to be a tough few months, as Bridie has said, but quite possibly a tough couple of years too. So we need to think about the amount of the facilities you have. Do they give you enough headroom? The length of those facilities, to get the bank's commitment to a longer term facility so you can sleep at night and give you peace of mind, and the best possible terms that you can get. I was on the phone this morning to a lawyer and all he's doing at the moment is what he calls amend and extend transactions, where he's resetting the terms of facilities and getting longer term facilities for his clients. And this is the time to be doing it. You don't want to be doing it on a Friday afternoon because something's gone wrong. You've lost one of your customers, or one of your main customers is unable to pay their bill. Whatever the circumstances of it, it's all about planning now for the future and trying to get the best terms that you can get with enough, as I said, enough flexibility and headroom within the various terms and conditions that allow you to trade through what will be some, probably some unexpected moments of trading. And in that, this is not so different to what we should all be doing, but it's something that probably gets deferred in good times because trading is going well, the banks are falling over themselves to try and lend money, well, sometimes at least. But now's the time to go back to the fundamentals of building that relationship and managing your bank. And I would say, don't assume that the bank knows how your business operates. I have been astounded with a couple of cases where people have come to me, and I've been helping them present their information to the bank, and they've banked for 10 years with a bank, but the bank, if you haven't got that borrowing record, they really don't know much about your business. So you do need to lead your bank through the story and the narrative of your business, and don't underestimate the way that you write the information, present the information. Quite often might be copy and pasted onto a credit report when they present that internally. So this is about stepping up the communication with the bank so it's more frequent, telling them all about trading and giving them regular information and creating that dialogue. Because banks, if you can make the life easier for your relationship contact point and therefore your bank, that obviously makes your life easier too. So when we think about presentation of information, what I'm talking about here is managing expectations. More than any other time, do not overpromise the likely trading performance. And it's a good mantra to have in terms of under-promise and over-deliver. But what you're trying to build here is a track record of reliability where you are able to present information on a regular basis that is more or less in line with your expectation and the expectations that you've set for them, so that there are no surprises and you build confidence, therefore, with the bank. So timely information is important. As I said before, last-minute requests are generally are not going to get you the result that you need. And if you think about it from the bank's point of view, the point at which they're going to give you difficulty is if they think the risk has changed. So you need to, in presenting the information, think about it through bankers' eyes in terms of, they know that they are in a risk business, but you've got to point up the good points and the bad points and how you're mitigating the risk on the bad points within the trading conditions that you're facing, so that you can give them confidence that you're taking all the right action and that they can have trust that you're running that business really well. Because these are the things you need to be thinking about. Have a look at the quality of the financial information that you're providing to the bank. Have a look at the capability of your finance department to make sure it's where it should be. And perhaps even consider whether you might need some more support from your accountant in terms of bringing that information together. If we get into difficulty with the bank and there are needs to refinance existing facilities, reset covenant tests, restructuring loans, this is where almost certainly you will need some external support, because at the moment when the bank is saying you've not fulfilled the conditions of this facility and we need to renegotiate it, you've got quite a weak negotiating position. And I think banks have been known to take advantage of that in terms of where they've set the new terms and the cost of those terms as well. So what you don't want to be is constrained by a new facility, facilities withdrawn, facilities reduced significantly, and you want to make sure that you've got market standard terms and conditions. So you will, I believe, benefit from specialist advice. I mean, your objectives here would be absolutely to manage the funding available, maximise flexibility in terms of how you run the business, and if possible, just extend that facility commitment so that you have a much longer runway in terms of your future funding requirements. And the last thing on this point about options during difficult times is I would recommend that you start, if you have not got already, an active dialogue with other lenders. You don't want to be going to other lenders at a point when you've got some trading challenges and the bank is starting to be a little bit difficult. You need to start building those relationships with other banks now, start those conversations now, and remembering that it's not just the high street banks here that are lending money. In fact, they have become very cautious in how they lend money to the mid-market and lower mid-market. So there are a lot more of new banks that have been granted banking licenses. A lot of capital has come into this market, and you can go to a whole range of new banks and new funds looking to lend money to small and medium-sized businesses. Now, I do accept that those new lenders are more expensive, and they might be charging you a margin of 6 to 8% rather than the banks would be doing at 3, 4 or 5% risk margin. But frankly, they have got money to lend, they've raised capital, it's committed, and they need to find places to lend that money. So there is now a very wide choice of lenders in the market. It's not just the top half a dozen banks. I'm talking about the UK market here. But, ultimately, I would say start those discussions. You need options and flexibility, and you need to keep this under review. I mean, ultimately, it is the trading performance of your business that will determine your relationship with funders. And what you need to do, I would suggest, is give your business the best possible chance of getting the finance that you need. So my summary of this is step up the communication with your bank and manage the news flow very actively. Find your sponsor, the person who's going to speak for you inside the bank or banks that you use. Try and improve the availability of funding by amount and term, and also seek some rainy day alternatives for when things don't quite go to plan. That is all I was going to say in my notes. Thank you very much.
Thanks, Steve. That was really, really useful. And I think there's a lot of good advice within that. I think we'll move on. Steve, perhaps you could
stop share.
Yeah, stop share. And maybe now would be a good time to hand it over to the people to everyone who's listening. Does anybody have any questions? Okay, maybe I'll start, because as I said earlier, we've got some questions that were sent in. Steve, one of the things that I know from people I've been speaking to, and certainly someone's written in about this, there is some concern about as we move forward, particularly those companies that don't have any assets. Do you think banks will look to increase personal guarantees?
Yeah, personal guarantees are a thorny issue, because it's very easy for the banks to say, yes, we want a personal guarantee because we want an alignment of interest between, you, the management, you, the owners, and us as your lenders. And it's easy to ask for, but it is, I think, personal guarantees should always be resisted in my book. But if your question is, will the banks look to increase the use of personal guarantees? I'm afraid the answer is yes. Some of these new lenders, they don't take personal guarantees, people like Spot, Cap and Capel. So not all the lenders in the market are about guarantees. They do proper risk assessment, and they will take, they will certainly take the decision to lend based on the business and the limited company entity that is there. But I do think we do need to be prepared for a little bit of a battle on personal guarantees going forward for revised facilities.
How would you come back if they ask for a personal guarantee and you're saying try and resist it? How would you resist it? What are your tips in terms of saying to them, actually, I'm not going to give you a personal guarantee?
Well, I mean, ultimately, if you don't have another person, if you don't have another lender to go to, because that the ultimate sanction is to say, well, I don't agree those terms. I'm going to go and bank with these other people, and they're going to give me the money without a need for a personal guarantee. If that is not feasible or not an attractive option, you can either you do a combination of these. I mean, you can either limit the amount of the personal guarantee, so it's not unlimited, so you can negotiate the amount of the guarantee. And the other thing you can do, which is often done and often missed, I think, is you can build in some breaks on that guarantee, by which I mean you have an agreement that's documented with the bank that guarantee will be released at a moment of time or a moment where the business performs at a certain level. So that you know that you've got this guarantee in place, but when you reach this particular target, it will be released, and you've got that documented. So it's not for forevermore.
Okay, thanks. Another question that also came in was, and you touched upon it in your presentation, was all about dual banking. So, should you reduce your reliance on one bank? And if that's the case, do you literally split your funding, split your allegiance, or how's best to do that?
Yeah, it does depend on the circumstances, and it is an option which might work, in certain cases. I'm dealing with a client at the moment where their main banking has been with HSBC for some years, but they've also got a commercial mortgage on their premises, and they've got that with Lloyds. So so they've been dual banked for a while. And what's quite neat about that is now that they're looking to get an increase in their facilities, they've been able to sort of make a presentation to both banks, and the message to HSBC is, look, we want this increase, and if you give us this increase, we'll move the commercial mortgage across to you, which is quite an attractive thing for the bank to have. And then to Lloyds, they're saying, you've known us for a number of years, we've been paying down our commercial mortgage. If you can fund the whole business, we'll bring all of our banking to you. And those sorts of arguments are really quite powerful within the bank, because that sort of ancillary and additional income and a widening of the relationship is a real feather in the cap for the people in the front line. So I think it can work. It's not always easy to run different different banking relationships. Sometimes it works with mainstream banking, and you might have another bank doing a foreign exchange, for example, in international payments, if you're that sort of business. It can work, and I think it just depends on the circumstances, Bridie. Okay.
Anything else from anyone? Because I've got a few more questions here, or I've just any other questions from the Christiane? Sorry, were you? There you go.
Yeah, sorry, I was muted. Hi, Steve.
Hi.
I was wondering how, as a small growing business, when is the best time and what is the trigger to think of a second bank, what should be the trigger to think about that?
Yeah, I mean, the easiest trigger point, I would say, is if you're a business and you are, opening a new facility or a sideline or something outside of the mainstream of your business. I mean, if you think about what you get from a bank, you've got your main bank account where you basically put all your payment flow. If you're cash rich, you might have some deposits, and you can always put those with a secondary bank. As I've said, if you're doing international trade, you can quite often put your international business through a different bank, and you start to build a relationship that way. I mentioned the example with the commercial mortgage, which is, could be sort of, it can be sort of partitioned into a different relationship. And unless you're a really big business where you naturally have a number of different banks, it is more difficult, I think, to do it. But I think even if you're not able to provide some ring-fenced piece of business to a second bank, I think having that active relationship and dialogue is really important, particularly when you think about the main banks. It takes them an inordinate amount of time to go through a process with a brand new customer. So even if you started today talking to another bank just because you think you wanted a second option. You could well be 3 or 4 months away, or you may even be 5 or 6 months away, even if you wanted to switch across or give them some business. So I just think having that degree of dialogue and relationship, whether you're able to give them, you know, business today or the hope of business in the future, I think it's an important tactic to use. Yeah.
And would you say all the banks are more or less the same, or are the Challengers Bank, you know, slightly different and maybe more flexible or not?
I think, well, the challenger banks are more flexible in the sense that they will often lend when the high street banks will not lend. So that is a bit of flexibility, but they are more expensive. I think you don't, I mean, the real difference, I think, is those, I don't know quite what they're called, but, you know, the internet-based banks. We've got a Revolut question on here, I see, as well. You know, I've got my own business account with Starling. I will never meet anyone from Starling Bank. It's a completely online service. So I think those banks are really good when you've got straightforward banking transactions, very neatly done. I moved my account from Metro Bank, and I had a bad service experience with Metro, I'm afraid to say. So it's a long way of answering your question. You know, that the flexibility is within the bank's policies, and I think why people think the main banks are less flexible is because their lending policies are so much more constrained than they used to be.
Thanks. And just on that, sorry, Christiane, has that answered everything?
Thank you, that's all.
Okay. And just on that, you mentioned Revolut. We've got a question about Revolut and virtual banking, and I guess that's around, you know, it's more difficult to build a relationship with a screen. And then also attached to that, Steve, as you know, we've got a lot of Irish members in Vita who have their organisations based in Ireland. How easy is it for them to open a bank account or start doing some banking transactions in the UK?
It's relatively straightforward, although the banks, I mean, you need to be able to get in front of the bank very often. Revolut is a different thing because that's online. You know, I had a case yesterday. I've got 2 people in Germany have got a UK company and they want to open a bank account, but they can't travel at the moment. So, you know, HSBC are really not going to help them get a new account. So in the end, for that one, I've gone to Santander, who, depending on the circumstances, would be able to do it remotely. But generally speaking, there's no problem in opening the account, but you need to physically be able to they need to be able to sort of meet the bank, because they've got to go through certain regulatory imposed criteria in terms of know your customer, if that's a phrase that's familiar to many of you, where, you know, they have to go through a diligence process to ensure that they understand, you know, who the directors are, who the shareholders are, what the purpose of the business is, where it's trading from, you know, all those sorts of things. And really doing that without going face to face is quite difficult if you're an overseas company. But certainly, you know, banks are always happy. I think particularly with Ireland, I don't think it should pose any issues. Obviously, you've got Irish banks in London where I am who are doing that night and day, I'd imagine. So that's always an option.
And just to almost add on to that, Steve, if the company is solely based in Ireland, would they need to have business in the UK as well, or would they need to have an office in the UK, or can they do it totally from Ireland?
They wouldn't necessarily need to have an office in the UK. I mean, the question I would ask is, why would they need a bank account in the UK? Because, you know, they could have a sterling account in Ireland from their Irish bank. Equally, you know, it doesn't. They don't have to physically be in the UK. I think, you know, a lot of the time, if they needed to borrow money, that is sometimes a bar, because a lot of banks will really are there when they lend money, that they're lending money to businesses that are either UK businesses or businesses based in the UK. So to that extent, it's a different question if they're looking to borrow money. But certainly opening a bank account is still relatively straightforward. Slightly painful at times, but relatively straightforward.
I think the question was really around providing a service in the UK, and the end user in the UK pays in sterling. So it's trying to avoid the currency issues more than anything.
Yeah.
I think that's the question.
Yeah, that's absolutely fine. That's absolutely fine. I'd be happy to help if you need any help with that.
And that was going to be my next question. Is that something they can do themselves, or is it better to have an intermediary for them?
I think they can do it. I think everyone, I think you can do it yourselves. And I mean, I would think, I don't know who you bank with in Ireland, but I mean, if you're happy to have the same bank, and let's say you're with Allied Irish Bank, there's no reason why you can't bank with Allied Irish Bank in the UK and have a sterling account based here. But equally, you could have an account with any of the banks.
Yeah, as someone who's got an Irish bank and an English bank, it's actually they're not particularly helpful in the UK, Steve. When you're doing the transaction, you do need to almost have both.
Yeah, okay. Yeah. Fair enough.
I'm not quite sure relations are still are that great in banking, the two banking. So I totally understand the question.
Okay.
Any other questions? I've got one just very quickly here, Steve.
I did, yeah.
In terms of sectors, you mentioned construction. Are there, can you give us a heads up? Are there any particular sectors that you foresee may have more problems in having in getting a great service from banks in terms of loans or future assistance? In which case, are they the ones that should really, really be getting their house in order now? I know we all should be. So, for example, businesses that don't have assets, that are service businesses, are they more at risk in terms of, having difficulties with the bank going forward? You mentioned construction. Are there any? We won't hold you to it, but just in terms of your experience, sure. Are there any ones that perhaps we should be slightly more aware?
Yeah, sure. It's a good question. I think you need to bear in mind, bankers. Lending bankers, they're simple folk. They're looking at what's going on in the market. They're not applying any special science to this. And the stuff that you and I read in the papers are going to be the areas where they're really concerned. And that covers retail, hospitality, and all of the relevant sectors that require people to travel to your your sales outlet, if you haven't got an online alternative that's going to stack up. So one of the companies I was helping had two restaurants in central London and 3 takeaways, and although they got the loan approved, when got the loan approved from NatWest, their trading outlook looks really difficult. If I look at my own sort of work in progress that I'm seeing, nearly all of my current workload is property based proposals, and I think banks obviously will default, and I think this is sort of what you're alluding to here. I mean, they will default to lending against assets because it's an easier proposition for them, whether that's a property asset or a debtor book. That is easier. But I think there are certain sectors of the economy. The service sector is such a large part of the economy now. If the fundamentals of that business in terms of its expectations and future cash flow are reasonably sustainable, there's no reason why the risk appetite for those will markedly change. I think it's more about either the banks have had bad experiences in a particular sector, and I know they're incredibly nervous, as I said, about retail and hospitality. Having said that, I was on the phone this morning to a lender. It was one of the challenger banks about a hotel transaction, very well-established operator running the hotel, and nothing there that would suggest they're going to put the brakes on that. Sometimes banks do put the brakes on sectors, and they're not always very forthcoming in telling people about that. But you know, I think they'll look at each case on its merits. But I think those business to consumer businesses, B2C businesses, are the ones that will probably come under a little more investigation, I'm afraid to say.
Okay. And then a final question from people that have sent in questions is: have the banks learnt from their past intensive care practices? Are they going to you know, provide customer service for once?
Well, there has been some learning. It's just my opinion, right? Because they got so much bad press, and you know, I have seen this myself, as I said, sort of firsthand. Some of the practices, you know, were really not acceptable. So one of the main changes, for example, is that if a client goes into intensive care, they don't now disrupt the relationship that company has with the relationship manager, but there is somebody therefore behind the scenes pulling the strings. But I mean, you know, you've still got that degree of knowledge and hopefully a reasonably long-standing relationship there, that somebody that knows the business and knows the people and can, as I said, sort of act as a sponsor for that business. Whereas in the past, if you went to intensive care, you got taken out of the business unit you were in, passed into this special unit of people that simply deal with problem cases all day long. And that drives a real negative mindset about how they are viewing their job and viewing the bank customers. So I think there has been a degree of learning. I wouldn't put it past some banks, you know, to do things that I don't think are palatable. I think we're in a moment now where, and I've used this once this year, where I recommended to a client to write to their MP, which they did, to say, and then tell the bank what you've done, because that sort of social responsibility and sort of political scrutiny plays really well with the banks, because the banks know, you know, they know the history here, and I think that sort of pressure can be useful if you think you hear of somebody that is not being treated well. So I suppose I'm sort of hedging my bets with your question there. I think some lessons have been learnt, but I think we have to be very aware that the mindset will still be about, I'm in the bank. How do I get my money back? What's the best way of getting my money back? And therefore, you know, there's always a lot of tension in those sorts of negotiations.
Okay, thanks. That's really useful. That's really useful. We'll all look up the names of our local MPs and make sure we've got their email address just in case. You never know. As a final resort. Steve, that's been really useful. Are there any other questions from anyone? No? Well, thank you so much. Just to wrap up, I said I think we've all learned an awful lot from that. This has been recorded, which we will get out as soon as possible. So if there's anything you want to go back and look at or review, Steve's details are also on his slides, which will be on the recording. So if anybody has anything in particular they want to follow up with him, or anything they think about after the event, or if anyone asks them any questions around the subject, the subject which is going to become more and more important, I think, over the next few months, of banking, then you'll be able to contact Steve directly. And Steve obviously is a member of BITA. So thank you very much. Thank you very much, Steve, and thank you very much, everyone, for attending, and look forward to seeing you all soon.
Thanks very much.
Thanks.
Thank you.
Bye all.
Bye.